have a copy of this strategy in the future. Okay, so this is already being passed to YouTube. Okay, so it's going to be on YouTube. Then in the future, personally, you might want to also have a copy for yourself. But just click to record your screen. It will make sense so that in the later dates, you can just watch it and watch maybe this evening, maybe tomorrow. Okay, because the more you watch this strategy, the more understanding you will get on it. Because at the beginning, like this, it may sound very funny. Now, this is what I teach often and often. But sometimes we need to kind of revisit it on a special day by special request so that we can actually have a look at it. So I'm going to go to the next slide now. Next slide. So the outline is simple. We're going to be using two moving averages because it's advanced. Okay, and I call one of them fast and I call the other one slow. So the fast method is going to be exponential and we'll color it red on our chart. And the slow method is going to be simple, and of course we'll color it blue on our chart or black or whatever. Okay. So basically what you're going to do is that you're going to have two moving averages on your chart eventually, and one will be black, and one will be red. Now the black is going to be 50, and the red is going to be 21. Look that. Now if I go to the next slide, you will see that I first of all give you kind of like a theory. Okay, kind of like to boost your knowledge in moving average, because some of us are here now, and of course we don't know much about moving average. It's not something you use. Okay, which is okay. So basically, moving average is one of the most widely used technical indicators, in trading, due to its simplicity, due to its effectiveness. People like me use it. Okay, and of course, it's actually good for people that use phone, because with phone you are limited to all these advanced and third-party indicators. For example, if a programmer starts today and start coding indicators, they may not be able to have it on your Android phone. Okay, you may not be able to have it on Android because if most of them also sell those indicators, right? So it will not be available on your phone. But moving average come prepared, okay, it come with price itself, all right? So that's why it's a universal tool that people use to trade. Now, what does it do? Basically, it identifies trend, all right? Moving average smooth out price fluctuations, all right? Make it easier for us, people like me, to identify the viral trend, whether the trend is going to be up, down, or sideways. Now, this is made possible because, please note this, because moving average itself is a derivative of price. That means the moving average is derived from price. That's what it means. So a rising moving average will indicate an uptrend. That means if the slope is up, as in the line drawn on the chart, if it's facing to the upside, then we say that that moving average indicates an uptrend, all right? And of course, opposite is true when it is falling. We say that the moving average is actually, pointing down, and so price may actually push to the downside. Permit me to just mute so that when you want to ask questions, just raise up your hand in class, and of course, you'll be allowed to speak to us. It's going to be participatory, don't worry, nothing difficult. Now, traders often use the slope of the moving average to confirm trend strength. So if the slope is very high, like if it's above 45 degrees, then we say that that trend is a very strong one. Or if it is below, like opposite is true, if it is around 45 degrees to the downside, then we say it is a very strong trend. But if it is less than 45 degrees, it may not be that strong. Now, I'm going to be showing you the meaning of slope as we move on. So let me go to the next one here. So if you look at this one now, you see the moving average on the chart right here. So the slope here for the uptrend on the left side is actually less than 45 degrees or thereabouts of 45 degrees. But the one low or the one below, okay, on the right side, when the slope is down, it's actually around 45 degrees or more. So that means when the price turned down the screen, the strength of this trend was very strong, okay, compared to when it turned to the upside. All right, so the trend to the upside was very weak, and of course the trend to the downside was very strong on this screen. But that's basically what moving average is all about. Now, what does it do also? Number two, it acts as a dynamic support and resistance to price. Now, in an uptrend, the moving average, especially of those 50, 100, 200 periods, often act as support. Okay, so in a downward trend, they can act as a resistance, right? So that means price will be bouncing off the MAs when it's going up or going down. Permit me to, at this junction, I'm going to come back to this. Permit me to share a screen with you. I'm going to go straight to my MetaTrader 4. and see if I can share that screen with you. Okay, so when you have something like, what I mean by that is, let me go ahead and show you something like maybe the 200 period moving average. So if I clean this chart now, and this is a weekly chart, okay, and I insert a moving average on the screen, moving average, and I say for example 200, okay, whether it is exponential or simple, whatever, then I click OK. So you can see that clearly on this one, this moving average is acting as a support for this price. So let me go ahead and pick this paint and show you this place. So it's basically acting as support at this junction. Okay, and of course in the future it will also still act at that support. I was actually hoping that the price will get to this moving average in the future. All right, so it's going to be acting as support. And by the time we go to D1, it will be clearer. So on the D1 front, we see it clearly here that the moving average is also acting as a support and resistance. So at this junction, it's acting as support. Let me see if I can reduce this one. Okay, so you can actually use this to know when it is time for you to buy or sell. So here, okay, let's put it here, and then let's reduce this noise. Let's make it smaller, then break it here. So we see it basically as support and resistance at this price, at this junction. You can see it. It's obviously clear. All right, so here a resistance, here a resistance, then here both resistance and support. Here until that particular price was broken. Let me drag it to the left a bit. Okay, so we basically see this one on the D1 front that the price, the moving average is also acting as a resistance and support, for this price. So when the slope was down, okay, that's around this region. I don't know if I can paint this one around this period. When the slope was down, the moving average was acting as a resistance. But immediately the slope turn direction and begins to go to the upside, okay, the moving average is also acting as a support. Support here, support there, support there. Now, the moving average may just be acting as a resistance. Is it clear now? So let me see if I can just delete this and zoom in a little bit so that we can see what's up here. So basically at this junction, this moving average is acting as what now? Basically a resistance, because the price is returning to it right now. Because this will signal that this price may most likely continue to do what? Continue to drop. That's all it means. As simple as that. Even on the D1 front. Okay. Now I'm going to go back to sharing my template. So that's how you know that the moving average is also acting as a support and resistance for the price. Now, moving average can also help you to generate buy and sell signals. Now, popular crossover strategy, especially on the cross, we first of all have the one we call golden cross. And of course, we're going to be using the two today as a strategy. So the golden cross is when a short-term MA, for example, the 50 period, crosses above the long-term MA, for example, 200. So as long as a short-term period, for example, 21, is crossing above 50, which is a longer term, we have a golden cross. So a dead cross is opposite when a short-term moving average is crossing below a long-term moving average, because this may also signal that the price will move down and therefore place a sell. Now, there are some other parameters we could use to check whether it is true to sell or not, which is basically what we're going to be doing today in this short. Within 1 hour, we can finish this class. Now, price crossover is if you are using a single moving average, then you want to use price crossover. Now, that's when price crosses above the moving average, which may indicate a buy or sell. Now, I do this a lot also. If I want to use a single moving average, there are some parameters I use. I can give you an example. So let me go back to my MetaTrader 4, give you an example. So if I'm using a single moving average like this one, I prefer to use the one I call bar crossing, this one. Okay, so this one gives me an idea of what I should do at every point in time. Okay, so I'm going to zoom in a little bit. Okay, and you can see that there's no bar here, there's no candle. Okay, it's just, we call it bar chart. Now this one gives me an idea of what to do at any point in time, especially when I'm using D1, okay, or H4. So if we go back a little bit, I'm going to just go back a little bit so that I can show you something. So on this one now, if I want to use this one to trade, Now, this period is 50. It's a 50 period simple moving average. So if you look at the properties of this one, see that I'm using the simple period moving average. That's simple method to calculate this moving average, but the period is 50, and I color it black. Now, if I want to use this to trade, okay, so if candles begin to close above the moving average, for example, in this case, I'm going to just use an arrow to show you what I mean. An arrow. So in this case now, you are beginning to see candles closing above. Now, it may mean that the price wants to go up, okay, but I will not place a buy. I will wait until I have a bar, okay, that completely engulf a previous bar, okay. That's why I'm color blind here. I don't want to know whether the bar is green or red. Okay, I purposely choose this color because I don't want to know whether the bar is green or red. Okay, so that's why I choose this color blind like this. Because if I make it candle, for example, if I do it like this, it will be red and green. I don't want to see red and green because red and green may confuse me whether the price is going to be bearish or bullish. Okay, so that's why I choose not to use a candle. I choose bar. Now, in this wise, where you have in this instance, where you have this bar engulfing a previous bar behind it, what I'll do is that I'll put 2 lines on my chart. 2 lines. So I'm going to just put 2 lines like so on my chart. Like this. I'll put a line above the candle that engulf and the line below the candle that engulf. That's what I'll do. Just put a line like this. And then I'll wait for a breakout. Okay, so whenever the price breaks to is where I will sell to or buy to. So in this wise, for example, in this case now, I would have placed a sell from here. And of course, remember this is a D1 front. I would have placed a sell from here and I would have made a long one. Okay, on the US 100, that's a NASDAQ, 110,000, 111,000 points move is already more than $100,000 on the standard volume. This move within 1, 2, 3, 4, 5, 6, 7, 8 days, it's already more than $100,000. So this go for back crossing, and it's difficult to. It's actually difficult to trade though. It's actually difficult to trade, except you can be patient because this signal will fall every time, right? Another one is when you have it here. You can just go back a little bit to see more example on this chart. So I think we also have it around here. Okay, the back crossing this level. So I'm going to just put this one back to this left side. So you can also see it here. So the next day, when you have this, just click on sell from here. So once you see this one from around here now, you click on sell, and of course you make a lot of money. This one also moving about 136,000 moves. Okay. So, and we can go back and back and back and check. Okay. But of course, until you have a clear, crossing, you will not place a trade. Okay. Until you have a clear crossing, you will not place a trade. And of course, the crossing or the bar must touch your moving average. For example, you cannot use it in this wise. Okay, let me see if I can drag this guy to this side. Let me copy it. For example, you cannot use it on this wise. Okay, so you can see an example here where you have a bar, that engulf a previous bar. So this is invalidated. Let me just put a mark here to tell you that this is not a genuine. Okay, this is not because this is not a genuine move because the bar does not cross the average. So the bar you want to use must cross the average or touch the average. That's what makes it valid. Okay, remember we already said it in the strategy when I was giving the theory that you cannot use it except it crosses the average. Let me show you that one. That's this one here. So when you have a price crossover, it's when price crosses above the MA. It will indicate a buy or sell signal, vice versa. All right. So so it has to cross above or below or touch the average. Those are the idea. Let me go back to the strategy and see if I can share more, idea on this one. So when you have a situation, I think we can check and see if we can get some more around. Yeah, I think we can also see one here. Okay, so we can see one here. I'll just put an arrow instead of plotting lines, since you already know what I mean. So we have one here that gave a false signal. So remember, when you place a sell like that, you have to put your stop loss above the moving average. Okay, that's above the bar or below the bar. So you still have to use stop loss. Okay, like in this case now, we also have a scenario, I think, around here. Those are signals that will generate a sell. Yeah, I think this one also generated a sell signal. Of course, we can go back and check. Okay, I think this one generated a buy signal. Okay, so generated a buy signal like so. Right, I think this is clear enough. So you can use some of these small, ones to actually generate the signal for yourself to use. But this line is actually 50. So if you have a question on this one, you can just drop it in the comment section. Look at it so that we can quickly go to the main one that I want to discuss with you. Right. So let me go back to the theory so that we can quickly address it. Now, another thing you need to know here is that, like I said, a dead cross is when a small moving average, which is like, for example, 21 is crossing below 50. Okay, that's an example of a cross. Of course, opposite is true for a buy. Now, what we can also use moving average for is that it works well in a trending market, right? When a market is trending, you enjoy moving average. But when the market is not trending, you will not like it. Okay, when the market is choppy, it will give you issue. But when the market wants to trend, of course, if you have identified a trending market, for example, all those Euro CHF, okay, all those GBP JPYs, all right, they can trend very much, all right. So those are trending markets in the currency market. Of course, you can use them to advantage of the moving averages to make a lot of money. Now, I hope you are writing some things. I hope so. Then also, you can customize moving averages for different time frames. Because whether you want to do scalping, okay, you want to do day trading, you want to do swing trading, you can customize to whatever you want. And you can use 5 period also, because 5 period moving average works. Okay, because 5 is a Fibonacci number itself. Of course, you can also use 8 if you are going to be a scalper. If you trade all those 1 minute time frame, 5 minutes time frames, you can use all those 5 minutes, 5 period 5 moving average, period 8 moving average, period 13 moving averages. They work well for scalpers. Now, let me quickly go back to this place. So you can see that on the trading market now, you see how this movement average is generating buy, sell signal on the chart. As simple as that. Now, of course, number 6, you can also use this in multiple ways. And of course, in multiple formats. That's in multiple calculations. SMA, MA, the averaging one and the rest of them. So the simple moving average, weighted moving average, the exponential moving average, they all work. Okay, so you can choose based on your own comfort. But the one I prefer to use of all these ones listed is actually the exponential moving average and the simple moving average. Those are the two I use. Now, I have never used weighted moving average because I've tried it, right? It doesn't work for me. Okay, I don't just like it. It's a little bit irrational. That's why I don't use it. But you can use simple moving average and you can use exponential. I have learned to use the two of them independently and combined, right? And of course, I've been able to use them to make money. Now, it can also help filter noise and reduce false signals. So, especially for the one we want to discuss now, it will help you filter noise and reduce signals on the chart, especially when you want to combine it with, moving average for other indicators like maybe stochastic, okay, maybe RSI, maybe everything. So today we're going to see if we can combine it with stochastic, all right, so that we can generate a better signal. Now, I'm going to quickly go to number 8, which is also popular for stop loss and take profit placement. Now, what we're going to be doing today is going to be giving us an advantage, an edge to be able to use on both stop loss and take profit. All right, and we can quickly at a glance see where we can put our stop loss and take profit. Now, limitation to consider. Number 1, this strategy is lagging. All right. Sometimes price would have done what it wants to do before you know it. But if you are fast enough, if you are observant enough, you should be able to know, predict, and filter out bad trade and take advantage of the opportunity it presents. Okay. So, and of course, we're going to now go to the strategy proper. So this is where you need to pay attention because I don't have much time. I think I have about 30 minutes to explain this. So this remaining 30 minutes is very crucial. Now, I hope people are listening. So maybe you go, I don't know what you're going to do, but whatever it is, you have to just take it as it is right now. Now, what you're going to be doing is that you're going to be using lot size as conventionally with your account. I just put lot size 0.01 here for you to choose if you have all this low amount of money you have, maybe all these 100, 200,000, 500,000. You can use all these 0.0. But if you know you have money, like all these 2 million, 10 million, whatever, you can actually scale up your lot. Now, the take profit you're going to be using is between 100 pips and above. So you can use 100, and you can use 200. You can use, let me see if I can change that to what you will like, so that I will not be too rigid on the take profit. So you can use, let me say, from 100 pips, okay? From 100 pips. That's 100 pips, it's 100 points. So that's from 10 pips. That's what I mean by that, 100 pips. Okay, so you can change it to 20 pips, which is 200 points. So actually, I just say points. So let me just change it to points. Okay. So let me just choose the point, right? So, and then of course I will take it back to the reading page where you can continue to present, right? So from 100 points, right? So stop loss is going to be 5 pips, but these 5 pips or 5 points, I should have said 5 points. We're going to see how this works because it's a little bit kind of now. We also need to know that there's what we call consecutive bar close in this strategy I want to discuss with you. So consecutive bar close is the number of candles that close. If we have candle 1, candle 2, candle 3 close, then we have consecutive bar close. Now, beyond or that's above or below a particular moving average. Now, of course, remember, we are using the fast period 21 and slow period 50. Of course, they are still exponential and simple. Now, I'm going to go to the next one. Now, let's quickly look at the preambles. Now, there's what we call potential buy setup here, which is when the fast period is above the slow. And potential sell setup is when the fast period is below the slow. Now, when I say fast period is above the slow, it means that in this case now, like for example, in this case, when you see this buy, okay, so I'm saying that when the fast period, which is the red now, I don't know if I can just use an arrow. I don't have the arrow here, okay, because I'm not on the chart. It's above the slow one, okay. I'm going to just click on share, see if I can go to my chart directly so that I can work on that. So I'm going to come here and change this one to the strategy we're going to be using. So in this case, we have, let me use an arrow here, have the fast period, that's the red, crossing below the slow, right at this junction where I put this arrow. So that's what we call, that's what I mean by potential sell setup. So I'm going to delete this arrow and instead use a line, okay, to indicate that. So from here going forward, we have a, that's from this blue line now, we have a potential sell setup. Now, in this case, where we have right now, the line has not crossed each other, they're just touching, right? So we need a clear cross. So once the red is above the black now, if the red chooses to cross above the black, then we now have a buy setup. That's what we call potential buy setup. So let me see if I can write on the screen. I'm going to just click on text, okay, and write here so that you can see what I mean by potential, a potential sell setup. Of course, opposite is true. That's right here on this line. Then opposite is true. So it is possible that if this one eventually cross, maybe today, maybe tomorrow, since I'm on a daily bar, then you have a potential buy setup, right? Buy setup. So hope this is clear enough. I hope it is. So if it crosses, then we have a potential buy setup. That's what I mean by what you have here. Right, where is it now? Right here. Okay, so let me go to the front a little bit. Okay, so that's what I mean by potential buy setup, potential sell setup. Now, there's what we call reference candle. Okay, and of course, reference candle is a candle that I'm going to just quickly go to describe that now. Reference candle is going to be the candle. Please listen to this, since I'm not going to be on the chart to show you this one now, but you are going to see it once I move back to chart. Now, a reference candle is a candle that, first of all, return to a moving average after a cross, after a potential sell setup or potential buy setup. And of course, there's a resistance price, which I'm going to show you. And then there's a support price, which you will also know. Of course, there's a nearest low, which I will show you now. Of course, a nearest high, which I will also show you. So let me just quickly go back to chart and show you all these parameters very fast. Okay, so I'm going to go back here and then show you what I mean. So now, a reference candle is a candle that, first of all, I don't know if I can use arrow. Let me use arrow for this one. So in this, after this potential sell setup on this screen, this is going to be our reference candle. This one that puts arrow on. So I don't know if I can just click here and copy this and show you what I mean by reference candle. I'm going to edit this text and change this one to reference. That's the gray candle there with arrow. It's going to be our reference candle. Now, I'm going to show you support price now. As this price, I'm going to just click on a line, draw somewhere around here. Okay, so I'm going to just come here. Let me just double click this and see if it can drag. It doesn't. Double click again. It does drag. So we're going to use this as our support price. Now, I'm going to explain some of these things as we move on. So I'm going to just come here and change this value to support price. Okay, support price. Support price. Then I'm going to go to this zone. Okay, I'm going to just drag this up to show you that this is our nearest high. Okay, nearest high. Nearest high. Okay, and then I'm going to go to after reference candle. I think what are the other things I mentioned in that? Let's quickly go back there and check since I'm switching between the template and the. So we have resistance price, which I've already shown you. Okay, I've shown you a support price now because we're on a sell setup. So so we need the support. On the sell setup, we need the support price. We need the nearest high. We need the resistance, or we need the reference candle. Okay, and of course, potential buy setup. Now let's me. I think it's correct. It's correct like this. So let me go back here. So I'm going to just go to and display finally. So now I'm going to delete this guy. Arrow. Now, once you have a sell setup, that's a potential sell setup, which is when a red moving average, which is 21, crosses below the 50. So what you need to do is to wait, okay? You don't need to place a sell, right? You wait until the price returns to the moving average. Okay, so on this period now, I'm just going to use a cross here. So on this day, you wait, you will not trade. Now, remember, I'm on a daily bar. This could be 1 hour, it could be 1 minute, it could be 10 minutes, it could be 5 minutes, it could be 15 minutes, it could be 30 minutes, it could be 1 hour, 4 hours, daily, weekly, anyhow, as long as you have a candle on that chart. So what you're going to do is you wait for the first bar to close. As long as it doesn't touch the moving average, you are fine. Okay, another one close, you do as if you didn't see it. This one also close, you do as if nothing happened. This one close, and so on and so forth, so on and so forth. Then you begin to have this period where the price is no longer going down. Now, in this period, when the price is no longer going down, what it means is that the exhaustion, there's an exhaustion now, following this breakout, following this moving average cross, there's a potential force that acted on the price and begin to push it down until it gets to this level when the potential force is now exhausted. Now, it now formed a support price. That's what it means. Okay, so the price is no longer supported to move down. The price needs the resistance right now. So what the price needs to do is to go back and find the resistance, just like when you see a rubber band, okay? And when you expand the rubber band, when it gets a lasting limit, it will no longer expand. And so you need to release your hand. Of course, the price will go back to normal. And when you find your hand again, you can expand it again. And of course, you can do what it wants to do. Now, take this as an example. When you have a catapult, which is, a common thing. When we were younger, we used to use catapult to kill birds. Now, when you expand your catapult, okay, and of course, you put a stone in the catapult. I don't know how, I can't remember how we do. I can remember how we do it practically, but I don't know how to explain it in English. So you can, expand it to the limit. And of course, once you release your hand, the stone will go far. Now, the highest the stone will go is to a large extent dependent on how much you expand your catapult. So eventually, when the stone moves, the stone get tired eventually. Okay, and of course, if the bed is very far, the stone may not hit the bed. Okay, that means the phone gets the force you exerted on the catapult got exhausted before it gets to the bed. But if the force is great enough, it can go ahead and hit the bed. And of course, it could kill the bed. Some of them even hit the bed then, and then they will not be able to kill it because as at that time it touches the bed, there's no more force, okay, to do that. So for you to be able to act or get more force, the stone need to return to the catapult. That's what it means. If you still want to do more, if you still want to kill that bed, you need to put more stone on the catapult, expand it as much as you can, and then release the stone. So that's what the price is doing here. So look at the candle as if it is stone that is returning to your catapult, and eventually it meets your catapult, which is the moving average in this case. Now we say that this candle that first of all returns to the moving average is called reference candle. Now this reference candle, from this reference candle point, all you need to do is to look back behind you for a support price. So once you have this reference candle, you look back behind, and then you get a support price. Now, a support price is the lowest close or open between all the candles. So you look at all these candles, this one, all these ones. Look at the one that has the lowest close or open. Once you have seen it, they call the price. So if, for example, the price on this red is, on this bearish candle, is maybe the low, that's already the close. If it is 193.62.83, then we'll see our support price is equal to 192, I don't know, I think 19283.62 or so. I can't remember. I'm still going to check. I'm going to just do equals to. So I'm just going to check the price of this one. Yeah, close. Oh, okay. 19362.83. 19362.83. Let me edit. 19362. 19362.83. Right. So we have a support price as 19263.83. So once you have this support price, all you need to do is to wait, okay, for this price to do whatever it can and come back and break below the support price. So all you need to do is, let me see if I can move this one to this side, support price, and then I can extend this to the future. Let me see if I can do that. So all you need to do is extend this to the future, okay? And then once you see a candle that breaks this level, okay, then that's bearish close below that support price. Then you have an instant execution that you can use to execute, and of course you can make a lot of money. So in this case, this candle now, I'm going to just put an arrow on this candle, okay, is your confirmation bar for the price to go down. Guess what? The time this candle closed, right, on this D1, okay, that, like I said, it could be 1 minute, 5 minutes. This works on all time frames. So the time this candle closed, if you place a sell here, like this day now, see what you would have made on US 100. You would have made over 261,000 points. Now, on a very good day, like somebody that have like, let's say you have like 5 million naira in your account, you can place one standard volume on US 100. Okay, that's NASDAQ. Now, imagine one standard volume on US 100 and the price moved 261,000 points. That would have given you more than $200,000. Or let me say $20,000. I don't want to say $200,000. Let me say $20,000. Now, $20,000 on a standard volume from your 5 million, and you made $20,000. That means you have made more than 30 million. Within how many days? 1 day, 2 days, 3 days. Within 3 days, you have made more than 30 million. Now, you don't even need to make, what do you want to do with 30 million? Tell me, with your 5 million, you don't need 30 million. All you need is just maybe on the first day, okay? That day you place the trade on this day, okay? As this candle close, a new one open, you place a sell from here, and in the whole day, it means about 47,000 points. That's already more than $5,000. Now, that means you have $5,000. Now, $5,000 in Nigerian naira now is about maybe 800,000. Sorry, about 8 million. I wanted to say 8 million. So 8 million naira in Nigerian naira, and you have a 5 million deposit. You can close your trade and move on. You don't even need to wait for the next day, except you want to be greedy like me, right? So you can make more money. Now, let me see. I think somebody dropped a message here that we can look at. Okay, so Kennedy is asking me to show a buy reference candle. We're going to do that. We are still on the sell reference candle. Okay, so but this is where you use it. Okay, basically for a sell setup. Now, if we go back to that that conversation right here, you will see that I also have something like called buy setup here. So you can also take a picture of this if you don't have time to go to YouTube. So if like all these things I've just explained to you now, let me see if I can go to a sell setup and see if I can. Yeah. So if there's a sell setup, define reference candle as a bar that first retraces after the moving average cross, touch the moving average fast. Now, everything I wrote here now is what I've explained already, okay, but does not close above the MA slope. So what it means is that a reference candle, let me go back here. Now, this reference candle that I put an arrow on, that's this reference candle. I think it was this one. I don't even remember. I think it was this one, right? This one. So this reference candle, please note that this reference candle we are talking about, this green candle now, can never close above this this black line. So if the reference candle is so bullish, okay, it touches this what do you call it now? It touches this this moving average, and then it's also go ahead and touch this, because it's possible for price with volatile sometimes and close above two moving averages. So if it closes above the black, then it's no longer a reference candle. We'll cancel that setup and wait for the next one, because it can happen, right? For example, you can see in this case now, this price moves from it touches the red and it also touches the black. So if it is in this kind of instance, we cancel it as a reference candle because we don't need it to close above the black. As simple as that. Now, those are the things you need to know in that one. Then also, as we move on, I'm going to be telling you some drawdowns, so some drawbacks, okay, so that you know which to follow and which not to follow. Let me read the comment section. Somebody else drop something. So AI Wisdom is saying, sir, does it mean the crossing of the 50 period moving average when the candle engulfs any smaller candle, either buy or sell, look like a strategy taught during one of the classes on Inside Bar? Of course, that's true. But like I said, Wisdom, we're not discussing that one now. This is the one I need to focus on. Okay, that one works. This one also works. And of course, I want to pay attention to this because this is a special one. Now, eventually, you would have closed the trade. Now, let's discuss the stop loss. So if you eventually enter this sell right here, okay, after on this support price, after a candle close below the support price, you place a sell. Your stop loss is going to be above a nearest high. Remember, this is a nearest high, guys. So a nearest high is a zone you are going to pick on the chart, and it must be above the black line. Okay, any zone above the black line can be your nearest high. And if you look at this black line now, for in this instance, we go back, we look back, and this is the nearest high we can find. So this is where your stop loss is going to be. So eventually, if you're going to be taking this kind of trade, it means that you need a lot of money in your account. Okay, you cannot on US 100 too, because if you are doing it on Euro USD or all those ones, you don't need that much money in your account. For example, if you look at gold, we could just try it on gold now, as if you can just see a strategy. So if you look at it on this gold, let me drag it back a little bit for a buy setup. Okay, so we can use this good as a good one. Now we have a cross right here, right? Then let's shift it back a little bit. I have a cross, I think, right here. So in this case now, the candle that cross is also the candle that break above. So this is not the one I want to use to explain. This is a special case. So let me go back a little bit. Okay, that's a very difficult one to explain. I'm going to go back a little bit. Yeah, so let me just come here. Let me stay here. So you have a cross right here. You have a cross. And of course, when you have that cross, no candle is touching the line, which is the example I want to illustrate. Okay, you have a cross. Now, since you have that cross, okay, to the upside, which is a potential buy setup, you do not have any touch until around this place. So this becomes your reference candle. Okay, that's this one I put an arrow on. So all you need to do now is to look back behind from this reference candle, okay, from this zone now. You look behind for a high that is highest between the cross and the touch. So we can go back here and do something like this. That's between the potential buy setup, which is the blue line, and the reference candle. You look behind, and then you get your nearest high. So the nearest high is going to be the highest point between any of these candles. Close, not the high, but the close of the candle. So you could just say, okay, I think my nearest high is here. Therefore, my reference candle is green. Sorry, my new resistance, okay? Resistance price. I call it resistance price. So I'm going to just write the text right here. So I'm going to also write resistance price. Right? And of course, I'm going to do okay. So this becomes our resistance price. And of course, you can get the price. Okay, it's not difficult to get. All you need to do is to just point your cursor at the candle, maybe the blue, I think the green we do, and then you get the close price of this candle. So the close here is 3350.75. So we can just edit this guy to 3350.75, which is equal to 3350.75. Right? So with this, we do okay. So this becomes our resistance price. And of course, remember below here is our reference candle. I think you remember that one. So I'm just pointing this because I've done for sell. I should be able to do for buy. So we have reference candle. That right there. Okay, reference candle. Then that's this one. It's arrow. Then we have a support price. Okay, which is going to be nearest support. For this one, nearest support. So in this case, this is going to be our nearest support. Right? So I'm going to edit this one to nearest support or support price. Okay. Then which other one? I think I've already written potential buy setup. Okay, let me just write it if I'm not. So this is our potential buy setup cross. Okay, potential buy setup. Even though we'll not buy, but we know we have potential buy setup. Okay, on the screen. Right. So all you need to do now is once you have figured out all these ones, you can increase what you can do. All you need to do is to now wait until there's a close above your resistance price. Okay. So now that you have identified your resistance, sorry, your reference candle, wait out for a close above resistance price. As long as this red line remains above the black, then you can now wait for your breakout. And this guy is going to be that candle. Let me just quickly go ahead and show you that one. Going to arrow up. So this guy is going to be our guy. I think it's going to be this one. Okay, this one right here. So that's our breakout candle. Okay, once this one closes, this is where you place a buy. I'm going to just come here and pick a text, and then tell you to buy from here. Buy. Okay, let me just you can see. So once you have this candle close, all you need to do is to buy right here. Okay, on this, immediately this candle close, open the buy trade and target like 20 pips. Remember, I said in the text when I were in the PowerPoint, I said that you can buy and target like 10 pips, 20 pips. So for example, now this price moved on gold, it moves about 12,000 points. Okay, that's about 1,200 and something pips. Okay, so now on the standard volume, okay, that gives me about I don't know, I think about it should be around like $1,000. What's $1,000? It's more than $1,000. Okay, yeah, more than it, maybe about $1,500 for the standard volume. I'm even sure it will be more than that. Okay, I'm sure it will be more than that on gold because we're talking about gold right here. So this is how you use it to make money. Now remember, your stop loss is going to be on support price. If you look at this screen very well, you see a support price is what I hit here. This is where the support price is. Okay, so it depends on what you want. That's where your stop loss is designed to be. Okay. Now you can also look at, in this case now, this support price. If you don't want to use this far below, you can also use this one. Okay, it's also a good one because it's a turning point, right? It's like we said recent low. Remember, I think I mentioned it right here that it's actually a recent low. Okay, so if you look at that buy setup, let's go back a little bit for a buy setup. Okay, so I said you should put your stop loss. Stop loss is going to be 5 pips below the nearest low price. Okay, the nearest low price. So yeah, now nearest low price is the recent low price of candles behind and below the MA fast. Okay, I will just say MA slow. Yeah, I think that's an error. Let me edit it to reflect that. Let me edit it to reflect that. Permission to edit it to reflect that. MA slow, it should be slow, not fast, right? So I'm going to just save, and then we can continue our conversation right now. Page view. So I hope you understand this one. It's as simple as you see it. Now, stop loss. So assign take profit as the value from input variable. Of course, if trailing stop is yes, you can break even, then trail. And if trailing stop is no, you don't have to break even. So if you design this, if you are designing this and you want to put and you're trading and you want to put break even. Break even is if your trade has been in profit 10 pips, break even. That's what it means. Okay, you move your stop loss to break even and then you continue. But if you say no, I don't want to use trailing stop, you can just skip it and move on. Now, while MA fast remain above the MA slow, which means that this setup is still valid. If there's a reference candle, potential buy setup will be validated if the number of candles closed below the MA slow is greater than consecutive bar close. Now, let me go back to this chart now and show you what I mean by consecutive bar close. Now, if I come back here and I count, so if we begin to count now, how many candles since this MA fast, which is the 21 period in red, is above this black, which is the 50 period in black. So as much as this red is above the black, count how many candles close below the black line. We have only one right there. Maybe two. We can say 1 and 2. So if you have consecutive bar close as 3, which is what I defined here. I said my consecutive bar close is 3. So if at any point in time I have 3 candles close below the black line, while the red is above the black, I will not place a trade, even if I have a breakout. What I mean by that is here I have a red candle close below the moving average, which is 1. Then I have a green candle close also below it or around the moving average, which is 2. So as long as it's just 2 candles, I will still place a buy if there's a breakout in the future and this MA red is still above the black. But if we have 1 candle close, 2 candle close, and 3 candle close below this moving average, even if the candle close turn around again and break out, I will not place a buy because it means that it has validated my move. Now, that's how you use the strategy, and I wanted to understand it like so. Now, also, there's a specific case, which is like a special case before we close, which is when you have the candle that cross is also the candle that break out. Okay, like in this special case. This is a very special case, right? So you have a candle. Let me see if I can delete this blue line. I'm going to delete this blue line so I can use crosshair. So here you have a candle that cross, right? This green candle. Permit me to use an arrow so that I can use that one to close. So this is a special case because it will happen, you will see it, that a candle that cross is also the candle that break out. Okay. In that case, you just need one more candle that close above the candle. So this candle that I put an arrow on is the one that appear when there's a cross. So it is a candle that is sitting right at the cross point and it's green in color. So if it closes, it's fine. It becomes our reference candle. And of course, it becomes our high candle. So all you need to do is to wait for a candle that will close above it, which is going to be now this candle. I'm going to just move this arrow to maybe duplicate to this one. So this is where you buy finally. Let me just write that one here. That's a special case. Now, they don't happen all the time, but they happen on the chart. So buy here, right? Let me just type it there. So this is where you buy. Okay, this case now. Just buy here, and of course, you make your money. So in this case now, you would have made how many pips? Can you see? That's a lot of pips that you would have made. Remember, you target 10, 20 pips. Finally, remember that you put your stop loss. So here now is where your stop loss is going to be. Okay, that's below the nearest low. And of course, it's still below the black line. Remember, so I'm going to just edit and say this is your stop loss here. Okay, stop. Right? So I'm just going to do okay. That's why you put the stop loss. Of course, you can take your profit at any point in time. Okay. Take profit anywhere. Let me just put it like that. Take profit anywhere. Take profit. Don't be greedy. Okay. Just type that one there so that you understand that I mean it, that you shouldn't be greedy. So your take profit can be anywhere, but you shouldn't be greedy with it. So this particular strategy help you filter out a lot of noise in the market because it help you, make a better judgment of your trade. Now, also, I must also warn you that you cannot do what we call second wave. Okay, it's very important you don't do second wave. Now, the second wave is when a candle, the red line is still above the black and the candle returns to the moving average. Like in this case now, let me just use a pin to show you. This is what we call second wave when the candle returns to this region. So even if there's a breakout now above this recent high, which is going to be, so this in this case now, this is going to be your new high, right? So even if there's a candle that eventually break above it in the future, if the candle move now and break above this region, you cannot buy. It's not valid. It's not a valid setup because it has happened before. So we don't want to wait for it again. Sometimes people, make money with it. I don't trade it. This is the one I trade, and of course, this is what I give me. Also, you need to know that this is not a 100% get rich quick syndrome or get rich quick strategy. It works, right? Like maybe if you do, I can give you an instance because I've been using it for a while manually. So if you do like 10 trades, you should be looking to win 8 comfortably, all right? Sometimes it will hit your stop loss straight away. There's nothing you can do. There's no 100%, guarantee strategy, but I can tell you that this is a very, very, very good strategy. Now, before we close, since now you know, let me click, go here and show you something. So that now you know the buy setup, the sell setup, and of course, you know how to place trade, and of course, conclusion. You need to know that They are versatile, moving average, and of course they are easy to use and effective. Especially this particular class is especially requested for by somebody that uses phone, okay, because he doesn't have access to all those indicators that paint arrows. Okay, this is a very good strategy. You can use whether on your phone, or your laptop or your tab. You can use that and make money. Now, I must also warn you that I wanted to say something that you shouldn't be greedy with it, okay? And of course, that you can contact me at any time for questions. And of course, I'll be glad to answer all of them. So this write-up that you are seeing now, since it is recorded, like for example, now if you want to write anything on the screen now, all you need to do is to pause your video on YouTube and write whatever you see. So you can come here, write whatever you see. You can come here, write everything you see. You can come here, write all these ones, okay, write all these by setup. You can write them down. Once you pause your video, you can write them. Of course, if you come here, once you pause your video, you can write everything you see here. Of course, same thing. I think I'm going to have to edit this so that it doesn't give you issues in the future. Okay, I'm going to change it fast. Yeah, I think it's slow. Okay, it's slow. Okay, I'm correct also. So I'm going to just click on yes, okay, and page view. Okay, so let me welcome questions. Maybe one questions that then we close. Somebody wants to ask me questions, and then we close. Anybody? Questions within 1 minute, and then we round up. Okay, it's already past the hour, so we can close the class. Questions? You can raise up your hand. Of course, I will enable your mic. You can speak to me. Right? No questions. So I'm glad that everybody understands this particular strategy. Now, I want you to go ahead and use it to your advantage and make money. I'm wishing you great tips always. Of course, remember, use your stop loss, use your take profit, and use the risk that is okay with your account. Okay, if you have a not a big amount of money, you don't have to use big lots. Okay, but if you have a sizable amount of money in your account, you can use sizable lot size that is commensurate with that account. I think somebody dropped a comment. Maybe you want to ask a question. And of course, that's a Kendi, not a question. It's just thanking me for a very good class. So I appreciate you to Kendi later on. Of course, I'm wishing you all the best. Remember, trade safe, stay safe. Bye bye for now.